Hey, this is Brad Gill, NextHome Lifestyles. Welcome to another market snapshot for the city of San Jose and the week of January 24th, 2022. But first, let's start off with what's most important, and that's congratulating the 49ers for beating the Packers at home on Saturday. Looking forward to the NFC Championship game coming up here next weekend. Now, back to real estate. We're gonna take a look at active versus sold. We're gonna find out what exactly is happening as we head towards the end of January already. Remember, from previous market updates, we've been losing inventory. Now we're finally back to the beginning of the year, and it's time to start gaining inventory, but we're also watching out for that big bad buyer demand, and we're gonna find out how things are looking. Active inventory currently for this week was 308 units available for sale across single family homes, townhouses, and condos, up 5% from the week before. But here we go, pending numbers are up as well, 13%. Oh, a lot of that is being contributed to the fact that interest rates are on the rise as well, which is pushing a lot of buyers to pull the trigger as quickly as possible. But we'll have to keep watching to find out later in the year how exactly interest rates will affect demand. More on that in a little bit. Back to our trends. So over the last 7 days, we saw 198 homes come to the market. That's up 14% from the week previous. But at the same time, we saw 131 homes go under contract. So at least we are bringing more properties or more inventory available to the market than what's being purchased, but there's still a high amount of buyer demand out there, obviously. Now, a quick look at market expectations. This past week, we had 8 properties that expired. Yes, there were actually 8 homes in the market that didn't sell. That is down drastically from the end of last year and even down from last week. Price changes, we only had 31 across the board, which is only 10% of our active inventory. So again, not surprising to continue to see that number drop, just because, again, demand is so fierce right now. 30-year fixed rate mortgage. It is forecast for this year for us to see a pretty significant rise in that 30-year fixed rate mortgage. And if you watched our predictions for 2022 video, you could see that all of the major real estate and mortgage related organizations are forecasting that the rate is going to be somewhere between 3.3 to as much as 4% by the end of the year. Well, we're getting there because currently we're sitting at 3.56%. Now, to help you compare how that actually affects buyer demand in our area, believe it or not, we're probably looking at an average loan amount of $1 million. If we did, that payment would be about $4,500 per month. You compare to last week's numbers at 3.45%, you can see that this week's increase was enough to cause the payment to go up by at least $70+ per month. We compared it to last month when rates were 3.12%. The payment was about $250 less. And if you compared it all the way back last year when we had rates under 3%, you can see that the payment was almost $500 less. So, rule of thumb, when we see 1% increase across the board, we could see buyer affordability affected in our median price ranges of anywhere between $100,000 to $150,000. 2 things come to mind. That is number 1, buyers. If you're looking to buy, there's not much inventory out there to choose from. At least we are getting more inventory come to the market every week, but you definitely want to buy sooner than later because as those rates increase, that housing cost is just going to continue to increase as well. For sellers, if you're sitting on the fence thinking about selling your home, you may want to consider selling it sooner than later for the same exact reason. So I hope you enjoyed watching this week's market snapshot. I invite you to watch it again next week. And that's all I have for this week. See you guys soon.